How Adani controls the soybean oil business. Welcome back to our channel, where we explore intriguing topics and shed light on important issues. Today, we have a hot topic to discuss: the control of the soybean oil business by the Adani Group. In recent years, the Adani conglomerate has emerged as a dominant player in various sectors, including energy, logistics, and agriculture. In this video, we'll delve into how the Adani Group has positioned itself at the center of the soybean oil industry, influencing its production, distribution, and market dynamics. So, let's jump right in. The rise of the Adani Group. To understand how Adani controls the soybean oil business, we must first acknowledge the meteoric rise of the Adani Group. Founded by Gautam Adani in 1988, the group initially focused on trading commodities. Over the years, Adani diversified its operations, becoming a major player in infrastructure, power generation, ports, and logistics. This diversification laid the foundation for their influence in the soybean oil business. Adani's entry into the agri-commodity sector. Adani's foray into the agri-commodity sector began with its acquisition of the country's largest edible oil importer, Adani Wilmar, in 2000. This strategic move provided the Adani Group with a direct link to the edible oil market, including soybean oil. Adani Wilmar is now known for its popular consumer brands like Fortune and King's, with soybean oil being a key product. Vertical integration. One of the ways Adani exercises control over the soybean oil business is through vertical integration. They have invested heavily in backward integration by acquiring farmlands and expanding their cultivation of soybeans. By owning vast tracts of agricultural land, Adani has gained direct control over the soybean supply chain, from cultivation to processing and distribution. Influence in soybean processing. The Adani Group has made significant investments in soybean processing plants across India. These plants crush soybeans to extract oil, which is then used for various purposes, including cooking oil, animal feed, and biodiesel production. By owning and operating a substantial number of processing facilities, Adani has a stronghold on the soybean oil processing sector, enabling them to influence prices and control supply. Port and logistics advantage. Adani's extensive infrastructure network, including ports and logistics capabilities, gives them a competitive edge in the soybean oil market. They have established strategic alliances and partnerships to facilitate the import and export of soybean oil. With their efficient logistics operations, Adani can effectively manage the transportation, storage, and distribution of soybean oil, consolidating their control over the industry. Branding and market reach. Adani Wilmar, the consumer goods subsidiary of the Adani Group, has built a robust portfolio of edible oil brands, including Fortune, King's, and Jubilee. Through aggressive marketing and distribution strategies, they have achieved widespread brand recognition and market penetration. This extensive brand presence allows Adani to influence consumer choices and control a significant portion of the soybean oil market. Global expansion. Adani's influence is not limited to India. The group has expanded its operations globally, acquiring soybean processing assets and establishing distribution networks in various countries. This global expansion further strengthens their control over the soybean oil business by diversifying their supply sources and establishing a wider market presence. In conclusion, the Adani Group's dominance in the soybean oil business can be attributed to their strategic acquisitions, vertical integration, infrastructure advantage, and strong branding. Through these measures, they have positioned themselves at various stages of the soybean oil supply chain, allowing them to exert significant control over production, processing, distribution, and pricing. While their rise to power in the soybean oil industry has been impressive, it has also sparked debates and concerns about their monopolistic tendencies and potential impact on market competition. It's essential to note that the influence of any single entity over an industry can have both positive and negative implications. On one hand, Adani's investments and expansion have contributed to the growth of the soybean oil sector, creating employment opportunities and enhancing the efficiency of the supply chain. On the other hand, there are concerns about fair competition, market manipulation, and the impact on small farmers and local businesses. As consumers, it's important to be aware of the dynamics behind the products we purchase and the companies that control them. Understanding how Adani controls the soybean oil business allows us to make informed choices and support alternative players in the market, fostering healthy competition and promoting a diverse and sustainable industry. Remember, knowledge is power, and by staying informed, we can actively participate in shaping the future of the soybean oil business and other industries. That's all for today's video. If you found this information valuable, don't forget to give it a thumbs up and share it with your friends. Also, let us know your thoughts in the comments section below. If you haven't already, make sure to subscribe to our channel for more intriguing content. Thanks for watching, and I'll see you in the next video.